I accept that I'm a little bit crazy in this regard, but I expect that in the next 10 years, we're all transacting in Bitcoin. When Bitcoin becomes the largest currency system in the world, everything else starts to become the thing that's volatile around Bitcoin.
I'm super happy you're sharing episode 150 with me. That's a good celebratory episode. And I think it's really nice to record this one with you because I've been trying to get the people on that helped me along the way. So I just told you off mic, 50 was Max Kaiser, 100 was Tomer Strolight, and 150 is you. And your work has definitely helped me understand what I call the reason of existence for Bitcoin. I've been in Bitcoin since 2013, but I think it really took me my path on learning about the financial and economical elements and layers of Bitcoin that really showed me why this thing should exist in the world. And you were a big part of that. So thank you for that.
Well, I appreciate you saying that. I'm glad that my work is valued and is valuable, and I'm honored to be here and honored for it to be number 150.
All right, let's dive in. You recently published an article, Bitcoin's Exchange Theory of Value, and here you argue that Bitcoin derives its value from its utility in facilitating trade and exchange of value rather than solely from being saved. And I just want to start with this topic because I personally think that store of value comes for a medium of exchange. So I thought it would be fun to kind of dive into that. And my first question is kind of around how do you look at Bitcoin's evolvement from being a store of value to also becoming a medium of exchange? I think my main argument here is that it is in essence already a medium of exchange. I mean, I can send it to you. You can send something that I buy from you to me, right? But it's just not widely adopted yet. And I think when I look at the discussions that people have around, these things that, people conflate certain definitions, wishes, perhaps. And I just would love to start there.
Great. Yeah. And I also agree, I'd say, that whenever I'm talking to somebody about specifically Bitcoin payments, it's that there's a right order of operations, that someone has to first understand why Bitcoin will store value, and that the logical starting point of one's journey is buying a little bit of Bitcoin, and through that process is how you learn about Bitcoin, and then you start buying a little bit more Bitcoin, and you learn more about it, consuming podcasts, reading books, going to events, but part of the education is owning it, experiencing the volatility, maybe sending a Bitcoin transaction. And so I definitely believe that there is a logical order of operations, and it starts with somebody first needing to understand why Bitcoin would store value before they would turn around and start accepting it directly for goods and services. So I think we align there. The more fundamental point I was making, because say if I go into a Bitcoin exchange and I buy $1,000 worth of Bitcoin, some Bitcoin is transferring in the background. The dollars, they're the intermediary, and so I count that as a trade. It's just not a direct trade. Say I buy it at the exchange. The exchange is doing something in the background, but Bitcoin is transferring into the exchange and it's going into my account, and somebody that had Bitcoin doesn't have Bitcoin anymore. So there's value transfer there. And that, but that when you think about the utility of money, of how money came to be, even at a broader level than say Bitcoin, but any money is this tool to effectively enable trade and allow economic systems to scale through specialization and the division of labor. That the more functional a form of money is, the more trade it's able to effectuate, and the greater the gains from specialization and division of labor are. But that when you think about, trade at a unit economic level, and why I think about money deriving its value through trade and exchange, or Bitcoin as a derivative driving its value through trade or exchange, is this concept, because I do view it as, Bitcoin or any money is a turtles all the way down problem, if not for its root fundamental utility in coordinating trade. but that if you and I were to trade, if I was to build a widget and you were to buy it from me, the basis of trade is not zero sum, that we both get something from that transaction. You get my widget, I get your money, but then I can then go use the money to effectuate another trade. And that value is created through that division and specialization. And so if you build on top of that heuristic or that premise, it's that as Bitcoin effectuates more value transfer, so that could be more people buying and selling it for dollars or euros or yen. But then logically, it is if you were to only limit it to that, to only buying dollars, when in reality, you could either buy dollars or euros or yen or good A, B, C, or D, that the more actual commerce or more transaction value period that it's effectuating between two peers in the network, the more value accrues to the underlying medium. I think about also if I was to visualize Bitcoin, I visualize it as this perfectly fixed supply in a terminal state, and then thinking about a city being built up around it, a city of goods and services where the amount of money isn't changing, but there's more goods and services available, that the same nominal amount of money is allowing you to actually accumulate capital. And then the money itself increases in purchasing power as more goods and services exist. Well, how did all those goods and services come to exist? The trade that money itself allowed. And so a big part of the piece was to reinforce this to people. It's like, hey, everything you said, absolutely correct. Like, you got to crawl before you can walk. It's easier to buy a little bit of Bitcoin and store value in Bitcoin before you invest if you're a business and accepting it as payment. But none of that changes that the actual value in the medium itself has increased as people trade with each other to produce real world value. And that's what actually allows the money to increase in purchasing power.
While we're talking about this, is like, how can we, and maybe with some historical perspective, like, what's the timeline here? Like, how should people look at that? I mean, you're friends with Jesse Myers as well. He has this full potential valuation of Bitcoin that mainly talks about the store value part, right? Like, if people move percentages from current stores of values to Bitcoin, I don't know how much it is, like 9 or 10% of everything. We end up already with a $10 million Bitcoin valuation. Like, that sounds like something that takes time. How should we view that, and then going to medium of exchange? Like, how far do people need to zoom out in order to create a good picture of how they could or perhaps should view Bitcoin?
Sure. And I think about it a few different ways, but the part of it to articulate for people so that they know that the end point, right? So it's like, hey, because some people struggle to understand Bitcoin because they're like, well, you can't spend it anywhere. How, are we all just staring at our digital wealth? And so part of the value of sharing these ideas is to help people, hey, at the end state, this is going to be used to facilitate day-to-day commerce. It's not just we're all going to have, digital numbers in our account and stare at it and that's wealth. That as Bitcoin gets built, it is going to be used day-to-day to transact. Now, when I think about the timeline, to jump ahead, then I'll talk about how we get there, is that, and I accept that I'm a little bit crazy in this regard, but I expect that in the next 10 years, we're all transacting in Bitcoin. To kind of present a framework of like how 10 years could be realistic, I look at it and say that it's ultimately a function of Bitcoin adoption, and that right now the Bitcoin network stores approximately 1.6 trillion to 1.7 trillion in value. It is somewhere between the 5th and 10th largest currency system in the world. Depending on how you look at it, you might put it between 10 and 15, but it's inching towards the top 10. Within the next 10 years, there's 2 Bitcoin halvings. If Bitcoin increased by 10 times, if adoption increased by 10 times, so if, say, we went from 1% Bitcoin adoption to 10% Bitcoin adoption, that would vault it functionally neck and neck as the largest currency system in the world with the dollar. And then if you were to say, well, if it increased by 20 times, it is certainly the largest currency system in the world. When Bitcoin becomes the largest currency system in the world, everything else starts to become the thing that's volatile around Bitcoin. So then the question is it plausible or possible that Bitcoin adoption increases by 20 times over the next 10 years? And I look at it and I say, well, it's gone from 0 to 1 in the first 16 years. Knowledge distribution only accelerates. More podcasts, more books, more people having gone before you. 2 more Bitcoin halvings corresponding with central banks printing trillions of dollars, euros, or yen all over the world. What is more realistic, that 20% of the population figures this out in the next 10 years, or the alternative? And
Bitcoin custody is evolving, and OnRamp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, OnRamp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all time. Beyond custody, OnRamp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you. Bitcoin is financial sovereignty, so why compromise when you need liquidity? Meet Debify, the Bitcoin-backed lending platform made by Bitcoiners for Bitcoiners. Debify connects you to institutional-grade liquidity and allows you to borrow fiat or stablecoins, all while keeping your Bitcoin 100% under your control with a non-custodial 3 out of 4 multi-sig escrow solution. Get competitive rates from a global marketplace of institutional-grade lenders, with loan terms that you choose, from 1 month up to a year. There are no hidden fees and there is no rehypothecation, just pure Bitcoin-aligned lending with the highest level of transparency and security. Are you ready to unlock liquidity without ever selling a single sat? Go to debify.com/Bram, that's BRAM, to check out their current lending offers. That's debify.com/Bram.
And so it might be longer, but I think that when you start to think about it in that construct, you start thinking in decade or decades, not 50 years or 40 years. And then the other thing that I would mention is that I would say the thing that is limiting Bitcoin as a medium of exchange logically is so few people owning Bitcoin. That if you were to, say, if you just took a random network distribution and you took 10% of the population. So say in an economic system, there's 100 people and 10% of those people, so 10 people accepted Bitcoin as payment. Well, those 10 people only represent 0.8% of the network distribution in terms of possible pairs. And so what you realize is that you simply need more people to have adopted Bitcoin for a buyer or seller to be on either side. But when you go from 1% to 5% to 10% to 20%, the rate of increase of those overlaps grows by multiples, if not orders of magnitude. And so that's the natural limiter, but it's also the thing that causes it to naturally grow, that as one person joins the network, it's an incremental trading pair functioning for anyone that was already there. And then if you think about the network increasing by 10 times or 20 times, the opportunities for trade grow significantly. And then the other way that I think about it is just like at a certain point, Bitcoin's going to be the currency, the only currency that's working, so people are going to have to adopt it. They're not going to sit around and be able to evaluate it in the comfort of, an economic discussion or a question about what money is. It's going to be like, hey, my currency's not working, and here's this other thing, Bitcoin, that is.
Yeah.
So, I could be a little bit aggressive in terms of the timeline, but I also, have fairly sound reason and logic as to why it's not unreasonable.
Would it then also be more fair, perhaps, to not say that Bitcoin has a price, but it's rather an exchange rate with the dollars?
Yeah, and I was another thing I was thinking about is, say somebody buys a book from me and pays in Bitcoin. It's like, what happens to the dollar price of Bitcoin? Does anything happen? Or if somebody sells any good or service and the dollar's not involved at all, or the euro's not involved at all, does it have any impact on the price? And you could say no, but it basically takes marginal demand away from one of those currencies, because the person on the other side isn't demanding the dollar or the euro. And so, and then when you start to think about it, it's like, it basically, what it is it's setting a price, and that's what an exchange ratio is. It's like, hey, right now, this is what the price that somebody's willing to pay dollars for Bitcoin, and it reinforces that there's a market right there, but that market's always changing. Similarly with goods and services, it's like, well, whenever somebody buys a book from me in Bitcoin or buys something from anyone in Bitcoin, they're basically validating a price, and a new price is established.
Yeah.
So,
what I find interesting is that this also happens. I learned lately in, for example, the border area between Canada and America, like where if you go to a Canadian store, you can actually pay in dollars and they give you Canadian dollars back, for example. Like people know what a better currency is, or what a better money is, right? And like there have been many examples in the past where people just gravitate towards the better money. And so I'd agree with you that as long as, as people are starting to demand, I think, a Bitcoin reward, for example, for their products or services, or accepting an offer to pay for a product or a service in Bitcoin, that is actually increasing adoption in a sense, right? Like if people are more open to receiving that as the monetary reward versus, a dollar or wherever they live and what currency they have.
Yeah, and that's also how I see this going. Entirely consistent with this idea of, you first have to understand why Bitcoin will store value. But then once you understand why Bitcoin will store value, you've gotten through, yes, it's volatile, but the volatility is natural because people are adopting Bitcoin for the first time. And despite the volatility, its purchasing power is increasing. Then you say, if I believe that there are people that would pay me in this, it becomes very logical for me to accept it, because the other path is accepting the fiat, paying the fees of the fiat system, and then converting it in, that it becomes simply the most efficient way to acquire Bitcoin, in that it will really be merchant-led. I don't think that there's going to be a bunch of people out there hammering just to spend their Bitcoin. It's going to be, there's something of value. There's a merchant that has something that people want, and that merchant wants Bitcoin.
Yes.
And, I like to think about it, it's like, hey, as long as I go to the gas station and they're accepting dollars, I'll pay them in dollars. But when the gas station figures out that Bitcoin's more valuable, they're going to turn on and say, hey, you can also pay me in Bitcoin, and maybe even give me an incentive to pay them in Bitcoin.
Yes.
And then there's going to come a time where someone's going to say, man, that currency that you're using is way too volatile. It could be like the example of a Canadian coming to the U.S. with Canadian dollars and saying, hey, just pay me in Bitcoin if you have some of that. And so, I think it's a logical progression. It doesn't need to, there's no way around that people need to first understand why it stores value, but that line of people only goes one way. People don't unlearn Bitcoin.
If more and more products and services are traded in Bitcoin, more value is stored in Bitcoin, right? And that's how it grows. Of course, there are some critics that say, a fixed supply and a deflationary asset like Bitcoin cannot become a medium of exchange. How do you reply to that?
Well, I think on the surface, what what I would say is that a form of money that is increasing in purchasing power is the definition of your money working for you. That if it does the opposite, if you are saving in dollars and the price of dollars, continue to go down, or the goods and services continue to go up in dollar value, that what that actually translates to is the dollar being inefficient at coordinating trade. And that the opposite of it for all the currency holders at any point in time right now, if there's 19.8 million Bitcoin in circulation, all of those Bitcoin are held by somebody. And that if somebody is willing to accept their good and service, or good or service, for a lower price, willingly, voluntarily, saying, hey, you can have my gallon of gasoline for less Bitcoin today than you had to pay me later. It's a voluntary decision on their end. And the only reason they would be able to do that is because the money is actually effectuating trade more efficiently, such that they're able to lower their costs to be able to sell you gas at a lower price while still making a profit. And so in my mind, it is actually the evidence of the economy working, the money coordinating trade. And then what I would agree with, or what I would say is, there's going to be debt in a Bitcoin system. It's just that, say in the U.S. system, if the amount of debt in this system is 15 times the amount of actual money that exists, it will probably be a fraction, and there will be a lower inclination to go into debt or to finance your business via debt. And so I think how businesses are financed likely changes, but not that it won't be a problem of effectuating trade on a deflationary basis.
While you were talking about it, I was thinking how I see it now. If the reward that people get now, right, the fiat money, loses its value towards the future, people are incentivized to spend it quickly. And the people that deliver products and services are actually not incentivized to deliver value, because they also know that the value of the reward that they're getting will decrease. But how you explain it, and like in a Bitcoin world, right, the value of Bitcoin will go up because over time more and more people will ask it for it as a reward for their products and services. And so it kind of flips the script, where the people that offer the products and services are incentivized to actually create value, to earn Bitcoin in the quickest way possible, like today, because they know that tomorrow it actually buys more instead of less. And that might sound as a perverse incentive, but because the people that spend the Bitcoin also know that they could also easily spend it on something else, because there will be a lot of competition from like the supply side, that will actually force people into delivering actual value and doing their best, right? So it's a totally different type of, I'd say, incentive game, or even a total economy on a Bitcoin standard, because you're actually motivated to deliver value and earn Bitcoin today with the best thing that you can offer today.
Right. And I think also, so I do think that's the right framing. It's that when the money preserves purchasing power, you actually have an incentive to create value for others. And the reverse is actually true when money loses its value. You're almost incentivized to make money without delivering value.
Exactly.
And that might be hard for people to distinguish, but when you see that behavior, you can recognize it.
How can increased Bitcoin adoption for direct trade that we talk about, how can it influence global monetary system? So if people start choosing this better money, and they're not using what they hopefully will understand is the worse money. How is that going to look like? And maybe we can focus on, for example, there are many areas in the world that actually, or countries that have a national currency that's another country's national currency, right? So there's a lot of countries that have the dollar, for example. Is this an opportunity for them, or like how do you look at that if we zoom out a bit?
Yeah, I mean, I think, one way that I think about it is, one efficiency that is gained is that, if you just think about everything being priced in one currency, that if you, say, had a supply chain and you were in the United States and you were looking at certain suppliers in the United States, and then there were other suppliers in other countries, and everyone was pricing their goods and services in one currency, that makes effectuating trade easier. They can look at it and immediately know, is this good more expensive? What is the value of it relative to another option I have? So it basically makes the global economy more connected as the trading currency is consolidated into one. That distorts noise, it reduces the distortion of noise. It's like I think about when I went over to Prague last year for BTC Prague, and all the prices are in the local Czech currency, and then I'm having to do the math on what the price is in dollars, but then the exchange ratio that I get when I actually pay versus what I see on Google is very different. That when you expand that out to virtually every single trade, there's a lot of efficiency to gain by just everything being priced in the same currency. And so I think it will actually, and there's a great quote in the Bitcoin Standard by Save Dean where he talks about how an economy can grow as large as the people willing to use the same common currency. Well, imagine that there's actually an economic system that has 7 to 8 billion people all using one currency versus using 200. That the opportunities for gain and specialization increase, but the trade itself actually becomes more efficient because everything becomes priced and ultimately settled, and there's less friction to be had based on intermediaries that are exchanging currency or just pricing things in different currencies.
How do you see the use of Bitcoin perhaps change after that dust settles? Because who's gonna trust someone else, with paying or receiving a currency that another country controls, even though they would still want to trade with each other?
Well, what I would think about first is just the fact that, one, trade incentivizes cooperation. That if I have trading partners and I'm buying things from them, I'm more likely to want to cooperate than to be adverse if I depend on somebody else for something. And then the other thing I would think about is, again, like just every single layer of efficiency that is gained of, thinking about, hey, if I was buying something in the United States and it was 20,000 sats, and then I look across the ocean and I see, okay, it costs 10,000 sats and then it costs, 2,000 sats to ship. 8,000 sats better off. It's a lot easier for me to do that math quickly. Now I have to evaluate, is it the same quality? But taking that pricing layer of friction out, because you might be doing math on, a project, and maybe it's a manufacturing project. And if trade incentivizes cooperation, a big impediment to trade is not just the friction of jurisdictional currencies, but also, well, what is the central bank in your country going to do with its currency? Between then and now, if I'm investing in a long-term project or a long-term agreement with a supplier, that if I don't know about that, what that variable of pricing is going to be, because your central bank or my central bank might be changing things, that it's actually easier to think about not just prices in the present, but knowing, hey, no one's going to be able to print this money, so I don't have to worry about that. And then also just the settlement, that I can actually pay you. If you actually try to pay people internationally, it is really hard to do, and it introduces a lot of costs, and oftentimes there's a lot of holds on money. It might take a week to settle or weeks to settle. And so just really at every layer, and like the incentives to cooperate, nation to nation, with, eliminating currency or a competitive currency advantage as a source of friction. Like when you remove that entirely, it's like, okay, now we can really know, what's distortive or what's not. And then the pricing is the second layer, and then the actual settlement layer, and not having more middlemen that need to exist to effectuate a currency exchange just to then effectuate another trade, which is the goods or services. So many gains in efficiency that will come from that greater interconnectedness of people operating on a Bitcoin standard.
If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want. Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read. And it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order.
I love that. I think we'll get to it because I think there are a lot of things converging at the same time, with Bitcoin, AI, the whole democratization of productivity. And I think how you talk about Bitcoin in global trade, it eventually, I think, really incentivizes competition in a very, very positive way. And so even though the world looks like it's falling into like multiple blocks, into like a multipolar world, if there is a decentralized tool or money that people can use to still actually trade with each other, it sounds like that could actually be okay, like all these different blocks or unions or
this kind of trend that seems like it's going faster towards like a multiple block group of trading partners. If anything, I think it will accelerate the transition to Bitcoin, because there was a report out yesterday, or news article yesterday, the day before, talking about how China's going to be, has a new system to promote settlement in yuan. And then someone would quickly realize, well, I don't want to hold yuan,
Exactly. Yeah.
And there was another report from a week or two ago about how there was a Bitcoin settled transaction between Russia and China. Now, do we know that actually happened? It was a news report. I didn't, it wasn't confirmed by either government. But there is a dilemma that exists in the world by having everyone operating on non-neutral currencies, and that the quicker that people try to shift to other alternatives, you realize that it's just worse than the dollar. That you're still having to trust somebody, and you're having to accept a non-neutral currency that still has to be trusted, and is probably worse than the dollar or the euro. And so, and then the logical place to end is, well, why don't we just use Bitcoin? Like, no one controls it. It is neutral. And we can affect trade on it far more efficiently than any other system. And you keep coming back to this idea that's like, it's the one system that removes trust, not just trust and settlement, and then how the currency is held and then how you access it, but also the actual delivery mechanism, the transmission mechanism. When you think about that from the Bank of Japan, the Fed, the ECB, the People's Bank of China, that is the gate on all dollars, euros, yuan, yen. And so it's not just how you effectuate the transaction itself, but then those dollars or yen or yuan or euros, they have to sit somewhere, and either one of those parties could cut you off, such that if you move to a yuan-based currency trade and you accept yuan, well, PBOC could cut you off of the yuan. So I feel like it's almost like ironic's not the term, but it's like almost this. It'll be this rational response to try to look for other ways to affect trade that then accelerate people towards Bitcoin being the solution to that.
I mean, even if you don't like Bitcoin, you might even be forced to use it in a trade for something that you actually need, right? So you will be forced, you will be sucked into this dilemma or this discussion, right, with your trading partner. And I mean, what I wanted to say, like, this is why Bitcoin is so entertaining to me, at this point. We are just watching this unfold, because I think what we are talking about now is just very rational. Maybe the world isn't rational and we are a bit too optimistic, or maybe we are naive, right? But eventually I agree with you, every country wants to better their country first. So, if you have something that you need, you could be forced to buy it with Bitcoin. But also, if you have certain resources that are easy for you to get in your country, a certain type of energy like oil or whatever, you just really want to sell that, right? And you want a good reward, but you also want to find people that actually want to buy your thing. So it's just a natural way of getting to that conclusion. And I also think it's accelerated at this time.
Well, yeah, and also just think about this dilemma. If you're say you're Russia and say you have natural gas and you want to sell it to China, you're like, well, you have one of two scenarios. Either I accept your yuan, I give you my natural gas, my scarce resource that I actually had to do work to get out of the ground that has utility. So it's either I take your yuan, which you can print, or I want you to settle rubles to me, which I can print. Now, obviously, at the individual company level, individual companies can't print money, but the central banks of either can. That's like, hey, but let's just use the example because many companies in Russia are state owned. It's like, hey, do I want to get more of the currency that I can print from one of my trading partners? Do I want to get theirs that they can print, or would I like to get a currency that nobody can print? To increase my reserve.
Yeah, I think this is a nice switch, because I loved your book, gradually then suddenly, and I wanted to talk a bit about that as well. And I thought a nice place to start and a nice leeway from what we were just talking about. Yeah, in order for people to understand Bitcoin as money, which is basically what your book is about. It's a framework for understanding Bitcoin as money. And I just wanted to ask you, what is the key topic or the problem around money that you think we should explain to people even more than we might do already, to get them started on this journey of understanding money and then Bitcoin as money?
Sure. I think one thing that the further down the Bitcoin rabbit hole that you get, the further detached you might become from the original problem, or accepting that not everyone agrees that it's a problem, or that people don't understand the problem. And so, an example, I had a friendly debate 2 nights ago at a local university here with a professor that was not taking an anti-Bitcoin position, but more of like a generalist crypto position. But the debate ended up centering around whether or not my framing of the problem was the problem, which was, what is the printing of money a problem? And so I think that starting there, that oftentimes people look at Bitcoin as a solution in search of a problem, and that they don't really understand the problem or the extent of it. And so I think finding ways to relate to people in their daily lives about how the money printing is affecting them, and then working back up from that principle of you have a problem, and that problem is not actually marginal. It gets worse and worse, and eventually it fails entirely, and that we have to find a solution. Otherwise, what ends up happening is our quality of life in aggregate, everybody degrades. And so I think that it can be easy to, the further one gets down the Bitcoin rabbit hole is framing, Bitcoin better than X, Y, or Z, but not realizing that certain people don't accept that printing money is a problem, and that's the logical place to start. Because for me, on my own journey, I got to that point before I got to Bitcoin, which was I figured out that they were always going to have to print money. And I also knew inherently that was a problem. Not everyone does. That's not, they teach the opposite. They teach the opposite, that this is necessary. And what I did the other night was just really try to relate in a common sense way to the individual. Like, don't listen to what the economists say. If I could pay you in a form of money that can't be printed versus one that can, 100 out of 100 of you would choose the former, the one that can't be printed.
Yeah.
What are your incentives? Because your incentives are the same as the person next to you and the person next to them, and to really think, at an individual level and trying to relate to how the problem manifests itself in their own lives and how they might be seeking out solutions, not realizing it. Because that's the other thing, they seek out solutions of investing in the stock market. A couple of weeks ago, I went and talked to a group of doctors, and helping to relate for them of like how crazy it is that after they work doing surgeries from 9 a.m. to 4 or 5 p.m., that afterwards they have to get home and start becoming a stock picker.
Yeah.
Why is being a orthopedic surgeon not good enough? And so, a couple nights ago it was students, a couple weeks ago it was doctors, but recognizing that each person has a different life experience, but figuring out ways to relate the problem of money printing so that they can then frame or accept the frame that Bitcoin is a solution to that, then they're more able to start to endeavor down that path, in my experience.
Yeah. You also talk in the book about the only way to consistently arrive at the same conclusion about anything is through reason and logic. I think that's what we're talking about here. And you say, and the same is true for Bitcoin. And maybe it were the things that you just mentioned, but like, what were some of the logical conclusions that you ended up with? Was it just like what you just said, printing more money is bad? What should I look for in terms of another solution for money, or were there any other things as well?
Yeah, so I think that it started at that point of I figured out why they were going to have to print money. I figured out that was a problem, and that it didn't just end poorly, that it was unsustainable and that it would fail completely, and that history has shown that. You print money, people can't trade their finitely scarce time for a form of money that requires nothing to produce. So that was where I anchored to. But then I said, well, then there has to be some solution. So what is that solution? And I evaluated gold, and gold started to make sense to me. But I was also, at the same time that I was evaluating gold, on my way down the Bitcoin rabbit hole. And that I think that somebody has to first get to the point of understanding why a form of money that can't be printed, say, before you can understand how Bitcoin enforces its fixed supply of 21 million, you have to understand why it would be important. Because understanding the why it would be important then almost creates the incentive to go down further that path to then come up with a personal conclusion as to whether or not it's credible. And so on my side, it was first realizing that if it were true, if Bitcoin does actually have a credibly fixed supply, then it would be the solution. And then I had to understand actually, okay, now I have some framework to understand how it's all put together and why it's credible. And so those would be the two things that I would sequence. And there's a lot in between each one of those points, but it's like, okay, this is a problem. I have a problem. Everyone suffers the problem. It's going away. There's going to be some solution to it. Is it Bitcoin? It is a form of money that can't be printed the solution? Yeah, it is, but does it really have a fixed supply? Well, now I need to evaluate how it does. And as I started to realize the mechanism by which it was enforced, that's what allowed me to then have the critical thinking to then say, like, I'm not trusting somebody else's opinion. You know, like, you don't have to, you almost can't be all the way down that path to decide that you want to start saving in Bitcoin. Because you like, once you start to figure out, like, this is the idea, you start to save a little bit in Bitcoin, and then you do some more, and you read another book, and you read another, and then at some point you formulate a conception of, oh, I understand from first principles how the network works and how somebody cannot undermine it. That then when you get to that point of not relying on someone else's opinion, but reasoning from the bottom up, that's when you know, essentially when it really clicks for you in its entirety. But that's a journey. That's a journey that like you can't come to without having saved in Bitcoin for some period of time. Because part of the understanding of it is paying attention to what happens in the Bitcoin network as the volatility occurs, as somebody threatens, or, you know, as China bans Bitcoin mining and Bitcoin continues to work. If you weren't owning Bitcoin at that time, you wouldn't be paying attention. You wouldn't be viewing the world of Bitcoin through the same lens. That experiencing it firsthand is part of the education. So, but, you know, one of the things that I also relate is that, you know, there's something that will click for people that make Bitcoin possible in their minds, to say, like, okay, I just saw something, like something clicked in my brain. Many ideas came together. I just had this flash that, like, holy shit, maybe this isn't crazy. And then from there, you have to build the reason and logic as to be able to consistently get back to that same point. And that just takes time.
Yeah, I've called this, it's a continuous challenge of answering the question, can I still trust myself? Can I still trust my own judgment that I had at a certain point? And then you were like, okay, this is interesting. And then, you know, stuff happens, of course, in the world. And you're constantly confronted with your own due diligence, basically, and your belief in, if you did that correctly, and if you can still uphold the same amount of conviction or understanding, or however you call it, right? And so that's why, you know, for me, that part of the Bitcoin journey is a bit more spiritual or psychological, right? Because it's always just you, like, whatever other people do, whatever the finance experts on LinkedIn say about Bitcoin being a scam or a pyramid scheme or whatever, right? Or it goes down, or, you know, it's, you are constantly confronted with that question, like, can I still trust my own judgment, my own diligence, you know, that work that I put in. And I think that's also, yeah. No, go ahead.
Have I put in enough work,
yes,
to be able to understand this myself, rather than just hearing somebody else's opinion and taking it not necessarily to be as true, but it's because part of that's rational. It's like, okay, this is somebody that I respect, and they said X, so I'm going to believe that that's signal, but I need to test it myself. I need to understand why that's true, and that as you peel back those layers of the onion, you start to figure out how Bitcoin actually works, such that when something happens in the world, and this is what I would do very early on, is that when something happens in the world, I'd ask myself the question, did anything about this change Bitcoin's ability to credibly enforce its fixed supply?
Yes.
If no, then
carry
Bitcoin
on.
is good.
Yeah.
Carry on.
Yeah.
And you know, there's certain things that come up to say, like, hey, when China banned Bitcoin mining, we all knew how, in theory, things should play out. And then they played out the way that they should have played out. The network got slower. for a month or two, and hash rate moved to where it was more receptive, and the network kept working,
Yeah.
And then from every point forward you say, okay, this is how the network should have behaved. This is how the network did behave. If you're reading about that as if it's in the past versus something that you're experiencing in the present, it's just necessarily going to be a different experience. And you have to experience that yourself in terms of from this point going into the future, because something else will happen. And then you'll have to test the assumption, because something could, in theory, implicate Bitcoin's ability to enforce its fixed supply. Now, I've gone through everything that could possibly happen, and I don't believe that there's something that could challenge it. You have to accept that there's some infinitesimal percentage, but everyone hasn't also gone through their own logic to come to that conclusion, and that's a necessary part of the path. I just try to reinforce for people that that's unavoidable, and it's part of the process of owning Bitcoin and saving in Bitcoin, that you can't get to that point if you don't start your journey sometime in the past.
Yeah. I don't know if you are noticing, but I've been noticing that many people pretty quickly go to that, I call that the end of the road argument, which is either EMP or asteroid impact or internet goes down globally, right? Like it's kind of like one of those three that nowadays I see people actually pretty quickly lean towards. And I always say, like, okay, if I can answer this one, do I actually convince you that Bitcoin is something that is unstoppable? And some of them say yes, right? But they think that is a logical
point.
Yeah.
That's another good point, because through the process, one of the things I relate to people is that everyone who's gotten to the point where, say, you or I are, has had to answer the same logical questions that come up for every other person that hasn't yet crossed that bridge. And that doesn't mean that everyone has to come to the same conclusion or come to the same conclusion the first time. Like somebody might come to the conclusion, no, EMP attack, Bitcoin doesn't work. But then as they learn more about how Bitcoin works, they're like, oh, actually, okay, I get why the network still functions in this world. But to get to the point of having most of your savings in Bitcoin, humans are rational. They can make mistakes while being rational, but the more people that test the assumptions, that test the logic and come to the same conclusion, the less likely it is that we're all crazy, and the more likely it is that more people are just going to go through the same logical process and come to the same conclusion.
Yeah. Of course, in Bitcoin, we say a lot, it's not an IQ test, it's an ego test. But I just wanted to check with you, like, how do you look at that? Because, I mean, what we're talking about, I would say does ask for some sort of intelligence in order to kind of like challenge your own thoughts. I think the ego part kind of comes after that, right? Like you challenge your own thoughts, you come to the conclusion that you were wrong, or didn't know anything that you thought you knew before, right? Or all your preconceptions were wrong, or you realized that, everyone lied to you about money, or rather they never told you about money, right? And then what you do with that, I think, is more like the ego part, if you can accept that, and then continue. But yeah, how do you think about that?
I feel like I constantly test my assumptions. I think that that's important. I think that there's one idea that consistently comes to my mind, which is like, are we the people that are this lucky, like,
Yes.
that get to live this, transition? And it's like, what are the chances of that? And then I'm like, well, that's not really logic. It might be a really slow or a really low probability, but somebody, if all the other logic is true, then somebody would have to live this. Someone would be at the very inception of this shift. The other thing, because some people, when I explain Bitcoin to them, I'll do Q&As, and if they don't come to the right question, I always prompt it, which is like, you haven't asked me the question, well, what would cause me to change my views of Bitcoin? Because I think about that quite a lot. And the answer that I give to people is that if it were possible to censor a single transaction, then it would demonstrate that the Bitcoin network is not sufficiently decentralized to enforce its own rules. And then the other thing that I enforce for people is that that we can never know how secure Bitcoin is until it's actually challenged, until it's actually threatened. So an example of that would be the hard fork in 2017, where the large Bitcoin miners and Coinbases of the world and large custodial services tried to increase the block size and were unsuccessful. People learned that the Bitcoin network was sufficiently decentralized to withstand that type of change to the network. When China banned Bitcoin mining, we didn't know what would happen if a large country actually outlawed it. We had a theory of what would happen based on logic and reason, but then when it actually happens and the Bitcoin network continues to work, you check that off the box. There's a scenario, say, where the U.S. government makes it unlawful to mine on top of any block, say, that has a transaction originating from one of the OFAC sanctioned addresses, which would be different than a financial institution not being able to accept a transaction from them. When I go through the logic, I say that those blocks would still get mined. But if it were possible for a state actor to enforce its influence to invalidate an otherwise valid Bitcoin transaction, that would be a problem. There's so many global competing interests that I don't view that as likely, and I also don't view it as, if a large state actor was to play out the game theory, I don't think they would go down that path. Not only would it not be constitutional, but it would demonstrate their own weakness. But those are the type of things that I think about. I think any sound-minded, logical Bitcoiner is not going through those exercises to create doubt in their minds, but to test their assumptions, to say, like, okay, did something happen today that changed my thinking, and what would be the thing that would change it, so that you can then hold yourself accountable. And then the other side of it is, well, what, if that thing did occur, what would be the other solution? Because we all still need money. And it's like, in that scenario, we go back to gold. Would gold work in that function? And every road just keeps coming back to Bitcoin. And one of the things that might seem circular for people, but this is also why people have to understand the why before they understand the how. They have to understand why the fixed supply of 21 million is important before they can understand how it happens, is that you have to understand why there would be this global incentive for everyone in the world to secure Bitcoin's fixed supply.
Yeah.
And once you understand that, then you can understand its resiliency. That it's not just that it's decentralized versus centralized. It's that the 21 million fixed supply is secure because we all have an incentive to secure, a mutual incentive.
Yes, exactly.
And so, it is of human creation, but it's also something that exists that's impossible to undermine, because no one has the incentive to allow somebody else to print money. And regardless of what happens in the world, that holds. And Bitcoin's now so large that it's practically impossible to co-opt.
Well, as long as two entities think it's a great thing that should exist, it exists, right? And so adoption, air quotes, might go up or down, but the fact that it will never die, I think, has become pretty clear. And I think a good explainer, as you mentioned, is that the more value gets locked into Bitcoin, the more the people that use Bitcoin are incentivized to uphold the integrity of the time chain, right? So to put more resources towards securing it, to making it more decentralized, which are the two main pillars for it to keep surviving, basically, keep existing. I also think what you just said it's so much more nuanced than the people that say, well, Satoshi said peer-to-peer electronic cash, and, I cannot buy a coffee with it. And so they literally take one sentence. And I think this kind of ties into the beginning. I think, in essence, it is peer-to-peer cash. Does everyone want that as a reward in a value exchange? Well, not yet. That's the first half of this conversation that we talked about. But I agree with what you said. Like, once you understand why and how the absolute supply is secured, that's where basically every other
valuable element of Bitcoin emanates from, right? Like if that didn't exist, you also wouldn't want to use it eventually as a money, for example. And so it's just way more nuanced than people think. I wonder if Satoshi actually thought about Bitcoin like how it is now. What do you think? Like, do you think it ended up like he or they envisioned, or is it even more than that?
That's interesting. I think about that some. I would have to believe that from the money side, it's, the fact that it's working out. It's like, there's some quote about how it's like, isn't it great when a plan comes together? That he put this out into the world and must have thought that, okay, I think this will work, but it's probably a really low probability that it does. But that if it does, this will likely how it plays out. So I would say that he probably thought there was a low probability that it would ultimately work, but that if it would work out, that it would work out this way. Mm-hmm. And then I would say that one of the ideas that I wonder about is that, because I think there's this whole side of how Bitcoin will transform energy markets and power markets. I think it would be hard to foresee that he understood that, because of just like the scale of the amount of power and like how it will help solve this problem of energy volatility and power distribution. Maybe he was thinking along those lines, but I think that would have been probably, I would fathom that he didn't think that it would revolutionize both money and energy.
Yeah. I think a signal just coming from that is the fact that it still exists after 16 years is a signal by itself, right? Like, I always kind of describe it as if this was a random idea dropped on a random internet forum. Do you know how many ideas get dropped on random internet forums every day, right? And to see where this idea is now at, how it's been manifested, how it's touching all these other industries that, in the beginning people wouldn't even thought about, right? Like that is a signal by itself. And then again, to kind of go back to, people dismissing it because a certain sentence in the white paper or some sort of expectation that is not met, if you look at what has been met and even more, I'd say that's a signal by itself.
Well, so I agree with that. One of the things I think about is the degrees of randomness that had to exist. It's like not just that it was released in the forum, but then just the individual acts of randomness that occurred. Al Finney joining the network. You just think about thousands of random decisions. You put Bitcoin in the same room with the same people. People make different decisions, and there could be different outcomes.
Yeah.
Could have failed. And then, the other thing that I think about is that oftentimes when people are critiquing Bitcoin, whether it's saying, well, what about an EMP? It's not going to work because there's, going to be an EMP, or that, it's not realizing its potential as peer-to-peer digital cash. What's more likely is that there is, at least in my experience going around and talking to Bitcoin with people, or talking about Bitcoin with people, is that there's a defense mechanism. I talk about this in the book. You mentioned at the start of the mistake that most people make is never endeavoring to make a discernible effort to go down the rabbit hole. And that part of what explains that is a defense mechanism that people are worried that if they really try to understand that they won't be able to. And that if they spend a lot of hours working on it and can't come to the conclusion that Bitcoin's money, or can't see it, that somehow says something negative about themselves, that they're fearful that they won't understand it if they try. And so then the defense mechanism is to shut down. Like if somebody was to say like, oh, an EMP attack will kill Bitcoin, the bottom line is they don't know enough about Bitcoin to think from the bottom up of what that actually means. Like they don't have like the foundation to think, well, if Bitcoin is based on the internet and the internet was built to withstand nuclear war, or how Bitcoin keys even work, and that there's signature schemes and that nodes can come back online, and keys and servers are secured in Faraday cages and bags. Like they don't have the bottom up foundational ways to think about what the Bitcoin network actually is. So how can you have opinion about whether an EMP attack could or could not stop Bitcoin, and that it's more likely a defense mechanism to come to some quick conclusion that it doesn't work, so that they don't actually have to go deep to evaluate whether it really is or isn't the case.
Yeah. I think that part is very undervalued or not talked about enough. Like while you were talking, I'm thinking about, about the seed vault in Norway. Like people think that's cool, right? Like that would survive like a crazy apocalypse, etc. But then if you think about what you said, like the keys and Bitcoin, like it's just code. It's just letters and numbers, right? That would probably also survive.
Yeah. It's one of the reasons to have keys in analog form,
Yeah. I agree. And I think it's just so decentralized. The building blocks of this network, or the core elements of this network are so decentralized that eventually you would be able to piece it back together. I do think this is what is hard for people. You should be able to conceptually think about it like that in some sort of probable future. How does that work? Like that is difficult to follow that abstraction on one side and then make it like a coherent concept towards the future, to then now give that some sort of risk percentage or factor, right? I mean, that's hard.
Right. No, it is. And that's why, like, when I think about it, it's that I didn't start evaluating those questions until the amount of my wealth that was saved in Bitcoin was like 5 to 10% or 10 to 15%. But when you're making a decision to save 0.5% or 1%, then you logically start peeling back different layers of the onion and thinking about these deeper things to be like, oh, hey, if I want to have a more significant percentage of my wealth, I need to understand this better. And you're just primed with more knowledge about how Bitcoin actually works. And then you can build up from that so you can have some logical or coherent explanation to yourself. But before you ever own any of it, it's kind of not even rational to spend that much time thinking about it. That really becomes a question as your wealth becomes more concentrated in it, and whether that's a good decision. But I do think that, for everyone who hasn't gone down that path, to think that if, how could anybody like myself have 99% of my savings in Bitcoin? Like for someone to start saving 40% or 50% of their wealth, you almost have to go down those scenarios.
Yeah.
I agree. It doesn't necessarily become logical too if you're, if this is one of 100 positions.
Yeah, I agree. All right, I have 3 more questions to wrap it up. Looking at the time, of course, this podcast is called Bitcoin for Millennials. Why do you think it's so important for millennials, especially like our generation, to study and adopt Bitcoin?
Well, I feel like I'm on the older end of the millennial generation, but I came out of college or university just before the great financial crisis, and they have printed, at least in the United States, they've increased the money supply by 7 times. It's made it incredibly difficult for anybody who entered the workforce after that period of time, which is most millennials, to accumulate any savings and be able to own a house without debt and to raise a family and to feel financially secure, because everything that you do earn effectively gets swept out from underneath you by the function of printing money. And that the generations that came before us owned assets and had savings and were able to benefit because they were in the position that they had accumulated capital prior to entering the economic system. And so I think that, for millennials, Bitcoin represents for the first time a way to be compensated and store value in the future that's going to afford us the things that prior generations were able to have that most of, say, our generation hasn't been able to experience. So I think it's just kind of the time, but we're also in that unique place where we can actually effectuate the change and pass that down for our kids, so that, kind of what we've had to experience coming into the economy isn't what future generations do.
Yeah, love that. I obviously agree with that. I think it's we can create our own path forward, because we can hopefully also through this podcast, right, tell more people that the path you thought you had to take, like, basically doesn't exist anymore, right? Like, well, you can walk that path, but the end destination that you think is there is not there. And so I actually would say it's like an opportunity to forge your own path, right? And also to realize, as you alluded to a bit before, like, yeah, we are actually living in that age. Like, we can actually do it, and there's a little luck involved, perhaps, or maybe it's all meant to be, I'll let that to the people listening. But I think it is the fact that you could actually adopt a better money that is, for me, one of the most mind-blowing things. Like, you can get it before other people get it, and so if you get that, that is when you can create your own.
Yeah, it's like, I think of it as creating your own luck. It's like the door's open, but you have to walk through it.
I don't know about you, but like sometimes I'm kind of like frustrated that still not many people see that is what Bitcoin can actually give them, when it obsoletes all other money, as I think we've talked about in this conversation. And yeah, just the urge that I just want to scream it at people, right? Like, you should pay attention to this. Like, this is such a huge opportunity to really build a life that you want. And it sounds so shady almost, like a course. I'm a course guy selling a course, like build the life you want. But I think you would agree. What is the timeline you think for this to happen? Like, when are people going to see this? Do we actually need that suddenly phase that you talk about for people to just be confronted or smacked in the face with like $1 million Bitcoin to then realize, like, whoa, okay, this is actually something I need to pay attention?
So I think that at least a framework would be that when somewhere between 3 and 5% of the population figure it out, that everyone will rush in. It will become obvious at that moment, and that will likely coincide with a global reserve currency or a currency of a developed nation hyperinflating, where people flood in because it's the only thing that's working, and that you don't need something like 10% or 20% of a population to form a consensus. You realistically need somewhere less than 5%. And the reason being is that, if you just look out in the world, if 1 out of every 20 people understood what was going on, 5 out of 100, you're talking about nearly 500 million people arriving at the conclusion that Bitcoin is money. And I'm not talking about owning $20 of it. I'm talking about if 5% of the population has figured out that Bitcoin's money and why it's money, that 500 million of those people are probably the people that have the greatest amount of savings, the greatest amount of access to information, and the greatest wealth to store. And that the rest of the world will rush in, and we won't have to ask when the suddenly moment's happening because it will be obvious. But that will likely coincide when a big global currency is no longer working. It's becoming very volatile. So again, I expect that to happen within 10 years, but maybe it could be 15. But the fuse is lit. The legacy system is not collapsing because Bitcoin exists. It was already collapsing. I came to that conclusion before I even knew what Bitcoin was. But now that there's a solution in hand, it's just a slow process for those first 1 of 100 turning into 5 of 100 to figure it out. But as world events occur, that contributes to it. More hours of podcasts being listened to. I think if we could watch a chart exponentially grow of, people spending hours listening to podcasts or reading books about Bitcoin, that would demonstrate why this trend is only going to accelerate.
Mm-hmm.
But I share a similar experience this morning. I was going on a walk with one of my best friends from growing up, like someone I've known for my entire life, somebody who I've gotten to own Bitcoin, and he's great friends with another of my friend, Will Cole, who works with me on Zapright, and like he still doesn't get it. And he was talking about selling some of his Bitcoin. I'm like, you can sell Bitcoin if you need to, buy something, but like you have plenty of other savings. Like you need to go down the process of reading my book. I'm literally here to answer any questions. And so there is a frustration. We're like, why aren't more people figuring this out and caring about it? And I think the reality is that people have to opt in, and that more people are. It's just maybe not the people in your life, but then your friend network becomes Bitcoiners because there was something about them that made them want to know, and to probably have figured out that something else was broken and that they were seeking out an answer. And so I think that the number of people that are getting it out is only growing, and that number is accelerating. It's just, I think it will be interesting to go back in history and map out what was it about the people that saw Bitcoin early, or that were willing to embrace it when everybody else thought that it was nonsense.
I think that's a great example. Yeah, it's so interesting. Like, it frustrates me as well, especially like the people that you love. You're like, come on, like. Yeah. But I think, again, that's also part of your own personal journey, is just that it's up to us. Like, if we really want to help other people, we should start doing things to hopefully help other people, right? Like, the work comes back to us. If we are motivated enough, then we should just start doing things like both of us are doing, right? And I think that is the only thing that we can actually do that can be the inspiration for other people to do their own work, right? Like, the action is the inspiration, and that's it.
Yeah, and I think, like, another example, I think I saw you put out a couple weeks ago, somebody like had written you a note about how, the podcast had really helped them out. And so it might be you have a friend in your life that's not getting it, like my friend in my life. And but then last week, a woman came through the Bitcoin Commons, or now Bitcoin Park Austin. Woman, a boomer, probably in her late 50s, early 60s. And she, I've never met her before. She's from San Antonio. She came up for this event with Natalie Smolinski and the Satoshi Papers. And she, made a point to come over and introduce herself. And she was like, thank you for writing the book and doing all the work that you do. I'm a boomer, and you literally saved my retirement. And that when you
incredible
hear things like that, you're like, okay, like, I'm like, thank you for telling me that, because here I have my, one of my best friends in the world who can't see it, and that's frustrating the hell out of me. But then when I hear somebody, it's like that, another domino just fell. It just wasn't somebody in my immediate network, but that, that fires me up and gives me energy to, keep doing it, because people are out there listening and paying attention, and just by the economic incentives, more people are opting in, at an accelerating rate. It's just they're in different corners of the world.
Dude, I love that. Thanks for sharing that. Like, yes, totally. I almost tweet something like that every week. I'm getting messages regularly, and I just want to meme it, right? Like, don't stop talking about Bitcoin. That should be the meme. Just keep on talking, right? Like, that will help it manifest into the world even further. All right. I'd love to ask you the last question, and I ask everyone the same question, which is, what is a core belief that you will never let go of?
Ooh, core belief that I will never let go of. So I would say that's a good one. So one of the things I believe is that like, truth and objectivity exists in the world. While all value is subjective, a lot of what's happened over the last 10 to 20 years is muddying the water of what's true and false, or that true and false actually exist, but that there is truth and there is objectivity, there is right and wrong, and that, and I think that this is something else that most people might not accept, is that like it's probably a minority of people that truly want freedom, but that seeking out freedom is functionally the one thing that can never be sacrificed. But that if you look around the world or the history of humanity, that it's not, you shouldn't assume that everybody thinks that way, but that it is the most important part. So, yeah, those would probably be the two things. But that was deep. I haven't really thought about that in terms of core belief, but also, I'm an incredibly loyal person. Like, I do a lot of Bitcoin things, but I also, Bitcoin's not the most important thing in my life. And that, we're not here to stare at our digital wealth, that it's to do good in the world and do right by people.
Love that, man. Well, thanks so much for sharing. Thanks so much recording the 150th episode of this podcast. I really enjoyed it. Thanks so much for sharing your knowledge. And yeah, man, let's stay in touch. Thank you.
Yeah, it's an honor to come on.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode.